I mean, they're in the middle of winter and it's freezing cold and they've got record demand and they're still not buying our coal. So, and it's coking coal and thermal coal. So it's a pretty severe attack. I mean, for Indonesia, it's actually been positive because not only are they demanding your coal, but their price has gone through the roof.
Yeah, we are taking advantage a little bit of the issues. So how's the politics actually in Australia? I mean, the sentiment toward China, particularly in the export issue, is it? I was wondering how come the Prime Minister took a more stronger stance against, you know.
I won't say it on the call in 5 minutes, but here, I think he was stupidly following what the ex-president Trump asked him to do, and he did it without thinking, and the consequences for our country are pretty huge. So anyway, it is what it is. He's made the mistake and we're going to live to regret it. But I know your focus is more coal, but it's worth bearing in mind Australia's exports to China will be the highest ever in history this last year because of our iron ore exports. So
the iron ore, is it affected, or the export of iron ore to China?
No, not affected at all because we're too dominant a player. So the reality is the coal issue is big for coal, but for Australia, it's actually not proven to be anywhere near as problematic as China might have wished.
I see.
You're welcome to ask about it, but I'll probably be a little careful in my wording.
I know. Understood.
But I'm happy to speak my mind, as you can probably gather.
Understood. Okay, I'd like to... Hello, Mr. Prasan Goyal.
How are you, sir? How are you, sir?
I'm doing fine. Wow, good to see you again.
Yes, you will be fine right now because Indonesian prices are all skyrocketing, going up very much. We all generators in India are suffering.
Temporarily.
Correct.
We'll take the advantage of the golden moments.
Yes.
Enjoy the golden moments.
Golden moments, and how I've never seen such a rise in such a short time.
Yeah, it is. So I don't know how long it will last. Yeah, so
correct.
Probably after the Chinese New Year, or I don't know.
Yes.
So let.
Mr. Abhishek already joined. Halo, Pak.
Hello. Yeah, hi everyone.
Hi, Pak.
Hey, hello, Abhishek.
Yeah, hi Pakindra. How are you?
I'm doing fine, thank you. How about you?
I'm doing good too. Thank you. Yeah. Good afternoon, Prashant.
Good afternoon.
Welcome, Pak Ramli.
Hi, good
datang,
afternoon,
Pak.
everybody.
Yeah,
Hello,
Mr. Adianto, can you see me?
Yes, Pak Pras. Yes, Pak.
Okay.
And apologies from my side, means my webcam is not working, so means I won't be able to come on video.
Okay, Pak Abhishek. So, but you the presentation, Pak? You share it or we do it
Yeah,
from here,
Miss,
Pak?
I have already shared the presentation with Pak Adianto, so I think he will be sharing it on my behalf.
We will share it from Jakarta ya, Pak.
Adianto, should I just check that my sharing of screen works?
Yes, sir. Okay. Please, Pak. Okay, it works, Pak.
Okay, great. Thank you.
Okay, we are still waiting for Pak Jusnan ya.
Yusnan belum, Pak.
Jusnan.
Mungkin menyusul nanti, Pak Adi.
Okay. Okay, Bu Desi.
Can we start?
Yeah, please start now. I think it is already, yeah. We are now at 2 p.m. Jakarta time. While waiting for Pak Jusnan, and we have 300 participants actually registered for 300, but maybe they can join while we are having a webinar. So please, Bu Desi, start our webinar now.
Okay, hello everyone. Ladies and gentlemen, good afternoon. Warm greetings and welcome to everyone. We hope you are doing good today and in good health as you join us for this webinar. Welcome to webinar Coal Outlook Series 2021. And today on the third series, we will discuss together about the India coal market outlook and supply trend. How will Indonesia miners adapt to India coal market? This webinar is proudly organized by Coal Asia and Petromindo.com. We would like to take the time to give appreciation and thank you to our sponsor of today's webinar. Thank you to PT Geo Services for their support and confidence in our webinars. And also we will say hello to our speakers and panelists today. Please welcome the first speaker, Mr. Prasant K. Goyal, Executive Director at Batreswar Vidyut PVT Ltd India. Hello, Mr. Prasant.
Yes, good afternoon all. Wish you all a happy new year. And thank you for having me participate in the conference as always. Thank you, Pa Adianto and Pa Hendra.
Thank you, sir.
Thank you.
And let's welcome our second speaker, Mr. Abhishek Rashid, Research Manager, India Coal, Metals and Mining from IHS Market. Hello, Mr. Abhishek.
Yeah, hi, good afternoon, everyone, and I wish you all a very happy new year.
Can you turn on your video?
Oh, this video is not working,
Yes. Oh, okay.
Yeah.
Yeah, sorry for that.
Thank you for your time today. And our third speaker is Mr. Tim Buckley, Director of Institute for Energy Economics and Financial Analysis, IEEFA, Australia or South Asia. Hello, Mr. Buckley.
Good afternoon, Desi from Sydney, Australia.
From Sydney. Thank you very much for your time. And next, our speaker is Pak Yusnan Ruslan, Director of PT Indo Tambang Raya Megah Tbk. He will join us later.
Already,
Pak
Yeah.
Yusnan?
Yeah.
Okay.
Good afternoon, everybody.
Good afternoon, Pak Yusnan. Thank you very much. And welcome to our webinar. Yes, and our next speaker. Hello, Pak Ramli Ahmad, President Director of PT Firma Impex.
Hi, good afternoon. How's everyone? All good, I hope.
Good. Sehat ya, Pak ya?
Sehat, alhamdulillah. Terima kasih.
Sehat. And the moderator of this webinar is Bapak Hendra Sinadia, Executive Director of Indonesian Coal Mining Association or ICMA. Hello, Pak Hendra.
Hello, Bu Desi. Thank you for
Thank you, Pak
inviting.
Hendra, for your support. And for participants of this webinar, if you have any questions, please type them in the Q&A sections, or you can click raise hand later on the Q&A sessions for direct question to speaker. We will activate your microphone. Okay, Pak Hendra Sinadia, we will start this webinar and time is yours.
Okay, thank you, Bu Desi. Good afternoon, ladies and gentlemen, all the panelists, Mr. Prasan Goyal, Mr. Abhishek Raskit, Mr. Tim Buckley, Pak Yusnan Ruslan, dan Pak Ramli Ahmad. Good afternoon to all participants. So thank you, Call Asia and Potramindo, for inviting me to participate in moderating this very exciting and important topic for today. Very important for us, Indonesian exporter and producers, whereas India is one of the biggest export destination that we've been India has been very important market for Indonesia, and also from India side, Indonesia is one of the biggest coal supplier to India. So today is a very important meeting, and this is the second meeting, I guess, with in the Call Asia session concerning
third,
India.
Pak.
Last year the third, yeah, the third session, yeah, already. But for India side, I mean, last year we covered also Indian market, even in the during the early stages of COVID, and then now we are still maybe in the early stages of the COVID. If we look at the cases in India is already surpassed 10 million, and Indonesia is already surpassed 1 million. So it's still frightening, and we hope for the best. Yeah. Before we start, I'd like to take a little bit time to express our sympathy to we have a news today. There is a landslide about coal accident an accident in the coal mining in South Kalimantan. Yeah, so dozens of or so workers been trapped. So we hope all the rescue effort will go smoothly. Also, we sympathy to a victim of the banjir flooding in South Kalimantan last week, and now it's in the recovery process. So we hope all our friends in South Kalimantan can, able to operate in normally in very near time. So before we start, also we try our best to finish it on time, 3:30 or maybe 5-10 minutes late after past 3:30, and we're gonna cover important topics like the coal quantities India utilized to import in 2021. What is the outlook on Indian coal market? Yeah, and what is the potential India market for Indonesian coal? And the future of coal supply in India, domestic versus import, which we have heard that CIL, Coal India Limited, is planning to boost the domestic output. And also we have heard Prime Minister Modi's administrations is going to take more stronger, or more robust policy in boosting renewable in India, even though in the COVID situations. And we also keen to know how will coal trading patterns change as power plant in India consume more domestic coal, and also will India remain the key driver coal growth demand in 2021, and what are the expected biggest challenges for India coal mining in 2021. Of course, from the Indonesian perspective, we keen to hear the overview perspective of Indonesian coal miners represented by our friends here, Pak Yusnan, and also Pak Ramli, who has been dealing with Indian market for many years, and all the expert, Pak Tim and Abhishek, Pak, and Prasan Goyal. Okay, first we like to listen to the presentation from Mr. Abhishek Raskit. He's the research manager in India on coal and metals and mining from IHS Market. So the time is 10 to 15 minutes, 15 minutes maximum for the presentation. So please, Abhishek.
Thank you, Parkendra, and good evening, everyone again. So can we have the presentation, please, on the screen? So before I start, I would like to take this opportunity to thank the team of Petromindo and Coal Asia magazine for providing IHS Market with this opportunity to share our views on India's thermal coal market situation at present, along with our short-term outlook on imports. So as Park Hendra mentioned, I am Abhishek Rakshit, and I look after the coal markets of the South Asian economies for IHS Market. So can we go to the next slide, please? So before we start the session, I have to talk the audience through IHS Market's copyright notice and disclaimer. So this webinar slides are subject to IHS Market copyright and are being provided to IHS Market clients only. You are free to redistribute the slides internally within your organization in the form as made available by IHS Market, provided that all IHS Market legal notices and markings are displayed. You are not permitted to reproduce, reuse, or otherwise reproduce the slides or any portion of this presentation to anyone outside of your organization without prior written consent of IHS Market. This presentation is not to be construed as legal or financial advice. Use of or reliance on any content is entirely at your own risk and to the extent permitted by law. IHS Market shall not be liable for any errors or omissions or any loss, damage, or expenses incurred by you or your organization. So can we go to the next slide, please? The next one. Yeah. So before we go into the demand and supply dynamics of Indian coal industry, let's first have a brief on how India's economy is doing and where it is expected to be in the near term. With a smaller than expected contraction during the second quarter of 2020, the third quarter of 2020, and a faster normalization during the last quarter of 2020, our forecast for India's real GDP growth for financial year 2021 was upgraded from minus 10.6 to minus 9.5 in 5% in December, and further to minus 8.9% in January. The government's second mini stimulus vote 0.4% of GDP announced in early October 2020, which was in addition to the combined fiscal and monetary policy measures worth 10% of the GDP announced in March to May period, is providing some support to the economy and may be followed by additional fiscal support in the 2021 union budget. While the number of officially reported daily infections has continued to fall since its mid-September peak, the risk of resurgence in the winter months is still very high. External demand conditions also remain soft, given another rise of infections globally. Despite some initial positive developments on the vaccination front, with the vaccination campaign in India officially launched on 16 January, we expect that uncertainty about health and safety, not to mention the weaker business revenues and household incomes, are likely to undercut the country's recovery in financial year 2022, explaining the expectation of real GDP growth of just around 8.9% for the year after the large contraction in FY 2021. Can you go to the next slide, please? Yeah. So analyzing how India's industrial sector performed clearly highlights the gravity of the impact COVID-19 had on India so far. A look at India's Purchasing Manager Index, or PMI, since April clearly highlights the overall path of India's economy. Clearly highlights the path India's economy have gone through since the start of the pandemic. Now, the PMI is a measure of the prevailing direction of economic trends in manufacturing. The PMI is based on a monthly survey of supply chain managers across 19 industries and is based on 5 major service areas. The headline PMI number is a number which ranges from 0 to 100. A PMI above 50 represents an expansion when compared with the previous month. A PMI reading under 50 represents a contraction, and a reading at 50 indicates no change. Now we can look from the graph that the PMI started to recover from August and continued to remain above 50 mark for the rest of 2020. This clearly suggests a resurgence in India's economic activities. A look at the index of industrial production and the index of 8 core industries also highlights a similar story. The next one, please. The next. Yeah. Now let's have a look at how India's coal demand side fared so far. If you look at the impact of the pandemic on India's coal demand so far, it is not surprising to see that the overall thermal coal consumption in 2020 fell by around 50 million metric tons, or 5% on a year-on-year basis. Overall, subdued trends were witnessed in case of output from almost all the industrial units, including cement and sponge iron. During the lockdown period, almost all the coal-consuming sectors such as cement, captive power, sponge iron, and other small-scale industries were either shut or operating at a very marginal utilization rates. Even after the lockdown was withdrawn, the industrial sector continued to operate at low utilization rates owing to monsoon season. Monsoon this year started early and remained quite strong, thereby further straining the already stressed economy. However, the recovery in the last quarter, which also is a season of festivities in India, remained quite impressive. Recovery in sponge iron industry, however, got impacted again in the last quarter as the sector continues to face challenges in securing domestic iron ores. The next one, please. Now, power generation, which was categorized under essential services, could operate business as usual during the lockdown period. However, the significant fall in overall demand of electricity kept the generation under check. Fall in electricity demand can directly be attributed to the lockdown of industrial sector, which contributes to around 40% of India's total electricity demand. An analysis of India's total power generation during March to August period shows that overall electricity generation declined by about 10% on a year-on-year basis. Now the impact was even higher for coal-based generation, which declined 16% on a year-on-year basis during the same period. The impact was also felt in the share of coal in the total generation mix. The share of coal in India's total generation mix fell to 67% on average during March to August period, compared to 72% during the same period last year. Now, strong monsoon rain leading to good hydro generation also affected coal burns during June to August period. However, as monsoon started to retrieve since September and industrial activities started to gain momentum again, reliance on coal-based power started to pick up significantly. As a matter of fact, in last quarter of 2020, total electricity and coal-based generation grew year-on-year by about 6% and 8% respectively. This shows how fast the demand of coal-based generation is growing in India. Even the share of coal in total generation reached around 75% in the last quarter of 2020 compared to around 73% recorded in the same period last year. The next one, please. I think we can skip this slide. Can we go to the next one, please? Yeah, thank you. Now let's have an overview of how India's domestic coal supply market performed so far. When we look at the domestic supply side, coal production was not directly affected by the pandemic or the lockdown. The production rate, however, had to be curtailed owing to lesser offtake or purchase by the end consumers, particularly during April to July period. However, production started to post positive growths again since August, helping India post 1% year-on-year growth in thermal coal output in 2020. Domestic thermal coal offtake or purchase by the consumers, on the other hand, recorded a fall of about 3%. Now, this gap between demand and offtake led to a buildup of significant stock at pitheads of the coal producers. The next one, please. Yeah. So now, now the situation when it comes to imports market is even worse. India's thermal coal imports in 2020 recorded a decline of about 26 million metric tons, or 16%. Despite a massive 42% drop in imports in the second quarter of 2020, during which the first 2 months overlapped with the country's nationwide lockdown, imports have since recovered well, with imports in third quarter and fourth quarter respectively falling just by around 10% and 4% on a year-on-year basis. A faster than anticipated return of industrial activity post-lockdown was the main driver behind the recovery in imports. Although import growth was partially constrained by high inventories in the domestic market, which hit multiple record high. Now, Indonesian origin coal faced the greatest burden of the overall decline in thermal coal imports demand. Share of Indonesian coal in India's total thermal coal imports in 2020 fell by over 21% on a year-on-year basis. Now, this is the greatest fall among all the coal exporting sources to India. Indonesian coal share in the overall mix also declined significantly from 65% last year to about 61% in 2020. And the primary reason behind such a high fall in Indonesian thermal coal imports can be attributed to the lesser sourcing from the power industry. Now, as highlighted previously, the greatest decline in coal demand during the period under consideration came from the power sector. IHS Markit estimates that in 2020, overall coal demand from the power sector alone fell by around 40 million metric tons. In case of domestic supplies, power sector's offtake declined by about 20 million metric tons. Further, in India, power sector is accorded the highest priority in domestic coal allocation. Thus, in case of domestic supply shortage, non-power sectors are supplied coal only after satisfying the demand of power sector. This makes non-power sectors highly vulnerable and significantly reliant on imports. However, with a significant inventory of stocks, the government is now urging non-power sectors as well to start using more of domestic coal. The next one, please. And now coal imports by the power sectors declined by about 27% year-on-year in 2020. It is quite evident from the graph here that the greatest decline in imports came from government-owned power plants. At the back of subdued demand and record availability of domestic supply, Indian government has directed all the government-owned power producers to replace their imports requirement with domestic coal. The government further requested the private power producers as well to offtake more of domestic coal. In another development, India recently did away with the earlier requirement for power plants located at a certain distance from the domestic coal mines to use washed or blended coal with ash content not exceeding 34%. Now, this requirement was one of the reasons for many power plants to import a low ash coal and blend with high ash domestic coal before firing in the boilers. However, with this requirement removed now, further pressure on international coal market, particularly Indonesia, continues. The next one, please. Yeah. So the gap between domestic production and offtake kept on increasing since the start of 2020. On one side, it was because of the record coal production during the first quarter of 2020 and then a resurgence in output since August. Then on the other hand, demand or offtake of coal has not been able to keep pace with the growth in domestic coal output. This led to a significant buildup of coal stocks at pitheads, which reached an all-time high of around 79 million metric tons by May end, and sits at around 60 million metric tons at present. Similarly, the coal stock at power plants have also been hovering at very high levels and peaked at around 51 million metric tons in April. And similar is the case of stocks at ports. Although with a pickup in demand, inventory levels have started to come down, but still they are very high in comparison to previous years. At the end of December, India was sitting at a thermal coal inventory of about 115 million metric tons, which is ready to be shipped or utilized as and when the demand starts gaining further momentum. The next one, please. Yeah. So after declining by about 5.5% in 2020, IHS Market expects India's thermal coal demand to grow by about 5% in 2021. The next one, please. Yeah. Now, Indian imports have taken a major hit in 2020, and the impact of COVID-19 will be felt on Indian imports for some years. COVID-19 not only impacted India's coal demand, but also placed Indian coal producers in a very comfortable position to ramp up production levels to counter any sudden increase in demand. Apart from these factors, major policy initiatives by the government towards the use of more domestic coal are also expected to restrain any significant growth in imports. After falling by about 14% in 2020, imports in 2021 are only expected to grow by about 8%. Growth in domestic supply capacity against weaker demand levels, regulatory changes that favor domestic coal, and high inventories mean that although imports will grow again in 2021, they will not return to 2019 levels until the mid-20s. On one hand, coal demand fell owing to overall subdued demand brought by COVID-19. Domestic coal production, on the other hand, mostly remained uninterrupted and continued to grow. This gap between demand and domestic availability led to a buildup of record level of inventories. Now, various policy directives and measures to curb import growth include the mandate for government-owned power plants to use more of domestic coal, dissolution of the requirements for a certain category of power plants to use coal with ash content less than 34%, then extension of coal rationalization policy to non-power sectors, and the introduction of a special e-auction scheme just for coal importers. So the imports growth will continue through the 2020s. However, the trajectory will be lower than expectations pre-COVID by about 15 to 20 million metric tons per year. Indonesia, the primary supplier to the Indian thermal generation sector, faces the biggest risk in terms of losing the market share. The majority of the policy initiatives introduced by the government are aimed at curbing imports from the power sector, which is the primary consumer of Indonesian coal. So that is all from my side. Thank you.
Okay, thank you very much, Mr. Abhishek Raskits, Zero Research Manager from IHS Market based in India. It's a very insightful information. Thank you. And there are some points, important point that you highlighted. Seems that there are some positive indicator from India. We can see the economic development in India expected to grow in 2021. Also, the significant import will expected to grow 8% in 2021. Share of coal in total electricity generations in 2020 is higher than if compared to 2029, and also the import. Of course, the import is have been hit significantly in 2020, and Indonesia is exporter is losing share in India market, and the Indian government is pushing for power producers, power generations to consume more on the domestic coal. So we are going to see how this Indian government policy will affect Indonesian exporter in 2021 and further. Thank you. We'll get back to you in Q&A session later. Okay,
Yeah,
next presenter is Mr. Tim Buckley. Mr. Tim Buckley, he's Director of Institute for Energy Economics and Financial Analysis, IEVA, based in Australia. He's covering South Asia, particularly Indian market. So we are keen to listen from Tim on how the Indian, policy, Indian government's policy favor for domestic coal, and also how the Prime Minister Modi administration going to to achieve their target on the renewable energy side, which will affect in coal, Indian coal import, and particularly Indonesian exporter in this case. So, okay, Tim Buckley, 15 minutes maximum for the presentations, please. Time is yours.
Excellent. Thank you very much for that kind introduction, Hendra. And I'll just share my screen now. Hopefully that will work. Excellent. Right. So I might just flick through a number of slides. I'm happy for anyone who wants a copy to have a look at them. So all of this information is from our reports that we've published, and it's all public information. So IEFA is a public interest think tank. As Hendra mentioned, I am based in Australia and I focus on South Asia and Australia. I thought I might just give a little bit of a different context. I think Abhishek's presented a very good overview of the economic landscape for India and some of the challenges. I would probably, in immediate response, say that I'm not quite as bullish as Abhishek and IHS is about the economic recovery prospects in 2021. I'd be looking for a much more moderated recovery. Demand has been picking up in the last 3 months or so, but we're talking about electricity demand growth in the last 15 weeks of about 3% year on year. Now that's dramatically improved on where we were only 6 months ago, but it's certainly far from a fully fledged recovery of 8 or 9% GDP growth per annum. But what I'd like to do in the next 10, 15 minutes is talk about 3 groups. Firstly, just to set the scene, deflation in the renewable energy industry is a huge global ongoing impact that you must understand and take into account when you're evaluating coal demand outlook, because obviously renewable energy deflation is a direct competition to coal. So I'll come back to that in a minute. I'll also mention the dramatically different landscape politically that we are looking at the start of 2021, and with particular reference to what China, Japan, and South Korea's leaders announced in the last 3 months. So I'll touch on that, and then I'll come back and spend the majority of the time talking about the Indian electricity and thermal coal demand outlook. So just on deflation. So deflation is the ongoing decline in renewable energy prices. So again, you're probably very aware of this, but given it is, I think, a long-term existential threat to the coal industry globally, I'll just ram the point home. Solar deflation is dramatic, it's ongoing, it's double digits every year. And this chart just shows how solar module prices have dropped 96% in the last 12 years. And it is our forecast that they'll halve again in the next decade. And that will see a halving in electricity prices from solar in places like India. And so you have to take into account the ongoing renewable energy deflation that is very, very clearly evident in India, and I'll come back to that. But here's a slide. It's a busy slide, sorry, but it's from the largest utility in the world, NextEra Energy of America, and they highlight that they're expecting ongoing annual productivity improvements in wind, solar, and batteries of about 15% per annum for the next 3 to 4 years. Now, if that sounds dramatic, it's their forecast, not mine. I agree with it, but this is the biggest and most successful utility in the world. It's also the largest investor in renewables in the world. And so it's worth bearing in mind that is the outlook presented by NextEra Energy in their investor briefings to their investors. And just one data point, we saw in August last year in Portugal, a solar tender awarded at $13 US, 11 euros per megawatt hour. That was down on a comparable basis, 24% year on year. and that is the lowest solar tender in the world to date. But we have been seeing these announcements coming every month for the last decade. So again, just to emphasize the point, expect ongoing, rampant, aggressive annual deflation in renewables. Now, why am I emphasizing that? Because India in December saw yet another record low solar tariff, and it came in at 1.99 rupees a kilowatt hour. That was down 15% in just the last 6 months. And to the existential threat comment, I know most people on this call are expecting a positive outlook for thermal coal, but I would raise the point that solar power in India is now below the marginal fuel cost of an existing domestic coal-fired power plant. So Coal India estimates the fuel cost alone to run an Indian coal-fired power plant is 2 to 3 rupees per kilowatt hour. Ignoring depreciation, ignoring interest, ignoring running costs, just the fuel cost, 2 to 3 rupees a kilowatt hour, you can now build new solar in India as of last month at less than 2 rupees a kilowatt hour. And one of the top renewable energy companies, Hero Future Energies, forecasts that he expects solar prices to be below 1 rupee, to get down to 1 rupee by the end of this decade. So ongoing rampant deflation by coal's largest competitor, solar. It's to me no surprise that the International Energy Agency CEO, Fatih Birol, concluded in the World Energy Outlook of 3 months ago that solar is the new king. So a very different perspective to maybe what the other panelists on this discussion will highlight. Happy to take questions in the discussion. But the second point, I don't think, I will get into India in detail in a minute, but just to emphasize the Paris Agreement, the COP26 in Glasgow in England in later this year will be a major priority, a major global focus. And it's worth bearing in mind the dramatic technology, policy and financial implications of the ratcheting up of global ambition led by China. I really think the most important event for the energy world last year was China's president commitment to net zero by 2060. And Wood Mackenzie forecasts that coal use by 2060 in China will drop by about 80% versus current levels. So an 80% decline in China by 2060, according to Wood Mackenzie. Now, that was then rapidly followed up by Japan, President Suga's pledge of net zero by 2050. And I won't again go into it detail, but it's worth bearing in mind Australia's single biggest buyer of fossil fuels is JERA of Japan. And JERA has announced a policy to shift to 100% green ammonia for all of its coal-fired power plants within 20 years. I don't know if they can do it. I'll be amazed if they can, but 100% substitution of thermal coal by the biggest buyer of coal, of seaborne thermal coal in the world, JERA. Anyway, controversial, but I'm here to challenge. South Korea, again, a net zero emissions pledge by 2050, and we're seeing the financial institutions and the leading corporates following suit. And so all of that means we've seen in the last 6 years a 2/3 decline in the coal-fired power plant pipeline over the largest markets for new coal in the world. And we've dramatically seen that in India and in Indonesia, yet to be seen, but Vietnam, Pakistan, Bangladesh, Philippines, we've seen virtual coal plant pledges of no new coal power by major ASEAN countries in the last 3 to 6 months. Pakistan, Bangladesh, Philippines, cases in point. And finally, my background is the financial markets. This is a chart showing some American share price charts over the last couple of years. NextEra Energy massively outperforming, Peabody Energy, the biggest US coal company, down 87%. So getting on to India. India electricity demand. These are our calculations at IEFA of the electricity sector in India, you know very much that coal is the bedrock of the Indian electricity system. It's 55% of existing capacity, but it's 70% of generation. So it is by far the largest source of power for India, with daylight second. But within that, it's worth bearing in mind that the utilization rate of the coal fleet in India was a record decade low of just 52.7% in the last 12 months. So the utilization rate has collapsed from 70 to 80% down to 53% in a decade. And India's gone from installing a net new thermal power adds of 20 gigawatts a year to about 3 gigawatts a year. So it's still growing, the net adds of about 3 gigs a year in the last 3 years, but the vast majority of net new installs are renewable energy, as Hendra mentioned in his introduction. So 70, 80% of all new installs of capacity are renewable energy. And that's only logical because it is zero emissions, zero air pollution, 100% domestic, and most importantly for India, it is the low-cost source of new supply. So these are IEFA's projections for 2030. And I might just, I'll come back to this if there are any questions in the discussion, but you'll see, we still see coal demand for power generation in India growing maybe 15%, but the vast majority of incremental demand for electricity in India will come from renewable energy. So we're expecting renewables to treble their share to 30% of generation just this decade. And Prime Minister Modi's objectives are actually far beyond our forecast. He's forecasting 450 gigawatts of renewables by 2030. We've got a more modest forecast of only 300 gigawatts, but effectively 90% of all new net capacity adds in India are coming from renewable energy in the next decade. And in the last 2 minutes, I'll just talk about coal demand. We can start with the bullish numbers, and these are projections from Coal India only 2 months ago to their investors. Coal India expects that coal demand in India will grow by 25 to 50% this decade. That's a bullish number, 25 to 50%. I think it's too bullish. I think it's out by 25+%, maybe 35%. But the first point I'd make is, as Abhishek mentioned, Coal India has a projection target, a production target of 900 to 1,000 million tonnes per annum of coal production in-house. So a 50 to 60% growth in their in-house production. Now, Coal India's had a history of making aggressive forecasts and failing to deliver on them. But firstly, let's bear in mind, if coal demand grows 25% and Coal India increases production 50%, imports will go to zero. Unlikely? But the second point I'd make is that Coal India is facing dramatically more domestic competition. National Thermal Power Corporation operates 60 gigawatts of coal plants across India, and its plan is to vertically integrate into mining of thermal coal. Its target is to lift in-house production 15-fold to 100 million tonnes a year this decade. Aggressive, probably not going to be achieved, but even if it's only half achieved, that could reduce coal imports by a third alone, ignoring what Coal India does. Secondly, Adani Enterprises, the biggest private power company in India, has a projection that they will increase their domestic coal production tenfold to 100 million tonnes a year. And they've got more of a track record of delivery. And they also have a second source of supply, which is the Carmichael mine in Queensland, 27 million tonnes for its phase 2. And so, and then the third factor is the government of India has tendered 18 new coal deposits awarded in December. They've got another 18 deposits pending in the next month or so. Second last slide, and then I'll hand back to Hendra. The government has a target to cease thermal coal imports. Let's call a spade a spade. It is forecasting a collapse in imports. I don't think that'll happen, mainly because the exception that's usually left out of the government's forecast is that coastal coal-fired power plants are not able to be serviced commercially by domestic mining. And you'll see most of the coastal coal-fired power plants in Gujarat, Karnataka, Tamil Nadu. And so maybe you'll see imports drop by half would be my forecast this decade. Last slide. The most important thing I'd leave you with is that the projections are only as good as the inputs. And one of the projections is electricity demand in India is going to double this decade. Now, 2 years after that projection was made, in other words, today, India is 15% off forecast because power demand in India has flatlined the last 2 years, whereas the government had forecast 7% annual growth. So 2 years in, we're 15% below the trend. So this is a report from Terry, and it forecasts the coal demand on the basis of the change in demand expectations that we've seen because of COVID and the slowing economic environment. So on that note, I hopefully have challenged people on this call. I'll hand back to Hendra. Thank you for your time.
Great. Thank you, Tim Buckley, for the very interesting and also enlightening information presentations. The study that you made very comprehensive, then it gave us more perspective and overview on the how India dealing with the renewable energy, pushing for more portion of the renewable energy in the Indian's energy mix. And you mentioned about RE deflations, yeah, which is ongoing in India. This is something that we have to look at how it's continue in the futures, and also the utility you mentioned about the utility rate on the utilization of coal in the power generation has been declining, yeah, despite the demand is increasing, but the utilization is showing the declining trend. And also the domestic productions, if you look at the CIL projection, which is a very ambitious, if it achieved, then it will have a big impact, a profound impact to Indonesian exporter. But we will see how this internal domestic policy in India will affect Indonesians and all the global seaborne thermal export to India. And I believe that all this development is affected also by the geopolitical development. And we've seen the China government has set out the timeline for the net zero global carbon intensity by 2060, and I believe Prime Minister Modi also will come up with his robust also target, yeah, in the climate change, reducing climate change efforts. Thank you, Tim. I think there will be some questions later on in the Q&A. So thank you, Tim Buckley, Director of Institute for Energy Economics and Financial Analysis, IFEA, based in Australia, which is covering South Asia market. Okay, the next three panelists ada Pak Jusnan, Pak Ramli, and also Pak Yusnan, Pak Ramli, ya. And what else? Yeah. Okay.
Prasan Goyal.
Oh, Pak Prasan Goyal. Okay. Before Prasan, ya, I like to ini Pak Ramli Ahmad first, ya. Pak Ramli Ahmad, he's a director of Virensa Impacts, ya, and so gave us some overview, the outlook. You have heard the presentation, the outlook from Abhishek, IHS market projections, and also from Tim, a very interesting presentation from Tim on the rise of renewable energy trend in India, which will be compete with the demand for coal, and also the potential declining of India coal import in the future due to the strong performance of the domestic coal supplier in India. Okay, Pak Ramli, you have been in the industry for more than
almost
2 decades, yeah, almost 30 years. So give us your view, please. We've been waiting for your view in this case. Yeah, Pak Ramli.
Okay, thank you so much, Pak Hendra. Thank you for the introduction. Well, basically, we live as a coal trader. I mean, I'm talking very much from a coal trader point of view. We depend very much on Indian and as well as the Chinese market. But today we have found that there's a lot of interesting facts here that Abhishek and team has brought about. We can see that the future will be very challenging for us because there's going to be a big change from the traditional way of doing business, because now you can see that actually wind and solar, for example, the cost is now becoming more and more cheaper. So you can see that the cost is declining, and solar energy has suddenly become much more cheaper. In fact, cheaper than coal, according to Tim. Yeah. So, but I must say that all this while, India market for coal has been a very price sensitive market. They are much more price sensitive than the Chinese market. As to the reasons why or things like that, we will probably talk about this later. But that's how I see it. We cannot ignore the Indian market totally. Okay, they will always be our good customers. But it seems that they are becoming. The customer base will now become smaller, because as I see it, that the numbers is going to reduce in time to come. So yeah, that's basically my point for now.
Okay, Pak Ramli, question from me. How long Indonesians exporter coal depend on India?
How long what, Pak? Sorry?
Indonesian exporter could depend on Indian market. Yeah.
Okay. Just for example, in the last one month, for example, you know, when prices
apparently there is a.
Yeah. Not think. Can you hear me now?
No, Pak Ramli, your voice is not so clear, but there's.
Okay. Can you hear now?
Yes, Pak.
Is it better
now? Yeah, it's better now.
Better, yeah. Okay. As I said, yeah, over the last 1 month, for example, we have been getting like 9. We have any from here. So, in my opinion, of course, those people who we also have Indian customers who have long-term contracts. Those will definitely be ongoing. But the spot market for Indian coal is really reducing.
Okay, thank you, Pak Ramli from Virema Impacts. We'll get back to you. Virema Impact, sorry. We'll get back to you, Pak Ramli. Yeah. Okay, next, Pak Mr. Prasan Goyal, yeah, he's Executive Director, Braj Reservoir Vidyut Private Limited India. You're representing coal buyer in India, and you've heard the outlook presented by Abhishek and also the study made by IFPA presented by Tim. So how do you see how do you overview the Indian market, yeah, from your buyer user perspective in India?
Yeah, good afternoon, everyone. Yeah, thank you. So basically, I think Abhishek and Tim have given excellent presentations. They have covered the maximum part, I mean, in all the numbers. As a generator, currently, I hope that the Indonesian imports will keep continuing. I mean, but definitely, as Tim and Abhishek both pointed out, that Coal India has become very aggressive in their marketing. Earlier, we would have to chase Coal India people, but now it's reverse. They are chasing us, they are calling us, and they are following up, and they want all utilities to start buying coal from them. But having said that, what Tim's chart showed, that all coastal plants, I mean, we are basically a coastal plant, so they would have no choice but to keep importing coal, because the logistic cost for the closest mine. Like just for our example, our logistic cost for getting coal from any Coal India mine is minimum 3,000 rupees. So it is very, very expensive. So it makes buying coal unviable from Coal India. So coastal plants will keep buying coal from Indonesia and other utilities from other countries. So that definitely will come. And basically, I feel that the government has become very proactive in improving the financial health of the discoms. They're taking it very seriously. So if the financial health of the discoms improve and generators start getting paid, I feel the overall power scenario in India will improve, and that will cater to demand towards coal. Of course, solar is becoming a very, very competitive field, but I feel that the backbone of Indian power is coal, so that will continue, and I feel there will be demand will happen. Demand will continue for Indonesian coal because coastal plants, power plants will keep buying coal. Yeah, that is my view. One last point I would like to add is that currently the prices are very, very high, so that is hurting the buying sentiment because it has really become very expensive. In 10-12 years of my history, I have never seen coal prices go up by $20 in a span of 8 weeks. So that is a ridiculous increase. I mean, of course, that has happened because of China. China has become a very big player in in buying coal, but that is really hurting. And as buyers, we are delaying our buying, or we are surviving with very less inventory, and so that is going to impact imports. If prices correct a little, then definitely imports will continue. Yeah, thank you.
Okay, thank you, Prasan. Is now the coal buyer in India is suffering because of the
very, very much. Yeah, very much.
yeah. So
We are not suffering. We are bleeding.
So how long your suffering will last? Yeah, we will
Yes.
see.
Yes.
Okay, we'll get back to you later,
Yes.
Pa Prasan. And before I let Pa Yusnan to present his view, I think we have in the Q&A column, there are a couple of questions addressed from the participants. So please, if anybody from panelists would like to directly respond it, feel free. Okay, next Pak Yusnan ya. Pak Yusnan Ruslan is director of PT Indo Tambang Megaraya. Pak Yusnan, you're one of the biggest exporter to India. What is your view? You have listened the presentations, the outlook from Abhishek, and also the study presented by Tim from IEFA. Yeah, Pak Yusnan.
Yep. Thank you, Pak Andra, and good afternoon, everybody. I think this is very interesting study from Tim, and also the presentation given by Abhishek earlier. I think both gentlemen have a very good presentation, and this is the fact that the market always the one that the competitive will be exist at the end. From my point of view, I think I will start from as a basic presentation earlier, that India actually the energy need is very big, and also the prospect of the growth also quite high as well. However, this 2020, because of the COVID attack, I think the world, India also cannot avoid. In the first half of 2020, especially in the second quarter, as a tight lockdown policy, the demand of electricity down quite significant. But if we see again in the third quarter and the fourth quarter, the demand of electricity is picking up. Yeah, that's what does it mean? Mean that the India have a very high consumption on the electricity and the need of the electricity, you cannot avoid it. On the renewable energy, I think team already make a very good study that the renewable energy now the depletion of the cost is quite high, and already par to the coal-fired energy. However, as I don't know, maybe later team also may explain. As I understand that the one that is have a par on the cost, that is not including the storage, if I'm not mistaken. That is one thing. And the second thing, the renewable energy also in the capacity wise may not comparison to the coal fired, that when you build one power plant, one unit, you can now already mostly already going to 1000 megawatt per unit. Yeah, I think this is one thing also that we have to bear in mind. The others is definitely coal still as a base load for any country in Asia, especially in Asian and West Asia. This is also when we compare on the growth, if we only compare to the growth between the coal-fired and the renewable energy, definitely the growth for the renewable energy is high, much higher compared to the coal-fired. However, the renewable energy, the portion is very small. And believe also that in the next 20 years or 30 years, I think renewable energy will slowly chasing the proportion of the coal-fired power plant. Yeah, and for now, we may see that coal-fired is the still as a base load. Then we do see that the demand for the coal is there. In Asia, for example, in Asian, if we see Vietnam, even though say Philippines, even though that they also doing the very tight lockdown during beginning of the year and the mid of the year, but lately we can see that the total of the demand annualized also not much lower than 2019. This means that actually the growth is there. It's because of only the very tight lockdown. Then at the time, during that time, the demand is slowed down. But actually, if going to normal, if the growth will be going very fast, that is my view. Thank you, Pak Indra.
Okay, Pak Jusnan Rusan from Indo Tambang Manggaraya. Okay, thank you for your input and overview. Okay, next I'm going to ask Abhishek and Prashant. Yeah? In the presentation from Abhishek, you mentioned about coal import from power sector is declining about 21% because of the government. The central government is favor for domestic producers to fill in the market rather than importing. But also you mentioned about a particular policy from the government which lifting the requirement on coal washing. Yeah, coal washing which is blended by with the high cal from India, and the certain policy has been lifted, and it ease the pressure from coal generation the domestic power generation to import coal. So could you elaborate more on this in the development of this policy, and what is the outlook?
Yeah, sure. Earlier in India, there was a policy and which mandated most of the power plants to use coal with ash content less than 34%. So now, because an Indian coal generally contains high ash, right? So because of this policy, many power producers were required to import coal, low ash coal, then blend it with high ash Indian coal, and then fire it in the boiler. And now, recently, the government of India has removed this requirement or the mandate, and because of and now, since this requirement is not there anymore, so power producers or the generators are not required to import low ash coal just for the purpose of blending. So now, since this requirement is not there, so definitely imports by power producers, particularly for the purpose of blending, is expected to go down. So that is what the outlook is.
Okay, thank you, Abhishek. Prasan, what do you, your perspective from your perspective on the policy?
Yeah, from our power plant point of view, basically ash is a very significant player point for us, which Abhishek pointed out. Nowadays, the pollution boards and the government has become very, very strict whereas ash disposal is concerned. So for us, the positive of importing Indonesian coal is that the ash content is very low. And whereas Indian coal, as Abhishek pointed out, the ash is very high. It's between 35 to 40.
Okay. Pak Ramli, as an exporter, traders, how do you dealing with this changing policy of Indonesia?
Can you hear me? I'm back.
Hello?
Can you hear me? I'm back, yes.
Yeah, okay.
So
we can hear you.
Yeah,
okay,
yeah,
please
so
continue,
I'll
Prasan.
just
Sorry.
repeat, so the ash for Indian coal is very high. It's between 35 to 40%. And so we as a power plant, as a generator, we have to completely dispose of the ash. We cannot dump the ash or, throw the ash anywhere. We have to completely show proof to the government that we have sold the ash or we have consumed the ash. So that has become a very strict mandate. It is getting monitored on a weekly basis that how much ash do you generate and how much ash what have you done with that ash. You have to give proof that how you have disposed that ash, and they are monitoring that on a weekly basis. So for us, again, as a coastal plant, it is difficult for because there are two factors. It is difficult to use more Indian coal because one is this ash content, which I shared with you. Ash is a very big issue because you can dispose of a certain quantity of ash, but if you are consuming say 100,000 tons of coal with 35% ash, you end up generating 35,000 tons of ash. So selling that quantity of ash is very, very difficult. So as coastal plants, I feel that we will still keep continuing to keep importing coal. And secondly, like I said, I pointed out that the price is a very big factor. Even though government is permitting this, the logistic cost is so high. So that also deters coastal plants to use Indian coal. So these two factors are directly connected to us in that sense. I hope that gives some clarity.
Okay, thank you. Pak Ramli, what do you feel on the changing policy of Indian market and affecting the traders, Indonesian traders?
But you see, the thing is, for Indian market and considering the location where they are, they have South African, and now they have even Australia as a comparison. In addition to Indonesia, so while Indonesian coal has been one of their favorites, but South African coal is coming more and more into India as well, and also of course Australia, especially when the prices are now, prior to this when prices were lower. They have calculated the economics, and it seems that Australian coal is still workable for them. If you're talking about these changing policies, for us, main type of coal that we export to India is basically the Portugal, 4446 GAR. This coal have ash values of anything between 4 to 8%, so which is actually average, I would say, does not affect this issue yet. On the other hand, we do have inquiries from cement factories asking for ash of 20%, 25% as well. But while these are not in huge numbers or in huge numbers, they do come in. The inquiry do trickle in as time goes by.
So we have to diversify the potential in the market in India. So
correct, because I think the cement factories do not mind having slightly higher ash. Maybe for the power plant, yes, they are very strict on that, and they're very particular. But like I said again, our low CV coal, which actually so-called the 42 GAR, and lower, which is being bought by these power generators, the ash is low, so I don't think that's much of an issue. I don't know, Pak Jusnan, maybe you would like to.
Yeah, Pak Jusnan, what is your view, Pak Jusnan?
Yeah, thank you. I think if refer from what Pak Abhishek just point out just now, on the Indian government policy, I think more or less will impact it to the coal import. However, we may see that India not only the bottleneck, not only how to increase the production, but also the inland transportation. Is the capacity. Just now, President explained about the cost, but they said the cost also about the capacity of the transportation. That is also one thing that bottleneck why the import, especially for the coastal power plant, is still there, and the need of the low ash content of coal in order to blend. Indonesia low CV coal also in general also competitive during the normal period, and also the coastal power plant of India, the design capacity also designed for the low CV coal. That is very suitable for Indonesia, as Pak Ramli mentioned, 4,000, even 3,000 something to 4,000 something to be blend with. And beside the power plant, the demand for the cement and the sponge iron also still quite strong last year, and believe this year also will be continue with the growth. Okay. I think Indonesia in the long run, I think still will maintain the competitiveness compared to Australian coal. I think definitely now Australian coal, why it can be competitive, because of they lost the China market. And when Indonesia coal compared to the South African coal, I think in the West Coast, I think will be tendency South African coal to be more competitive. But other than West Coast, then Indonesia, I think, will be most competitive.
Okay, thank you, Pak Yusan. So Indonesian exporter still has competitive in the West Coastal market of India, still compared to South Africa. Okay, Tim, now I ask you a question. So you've been very busy, Tim, responding to the questions in the column chat. Thank you. You've been responded to a few questions already. So before I ask you a question, so could you share with us your view in the chat column? I think there are a couple of questions from the audience asking for your statement on the RE deflation. Could you elaborate and sharing with us what is your response on this?
Yeah, thanks, Hendra. And I'd love to respond to Jasnan's questions or comments, because I think they're absolutely critical to understand, and I just wrote them down. When I talk about renewable energy prices, I'm talking about the cost delivered to the grid. So it does not include transmission and distribution, and it does not include firming costs. So Jasnan's question or observation is spot on. You have to consider the whole of grid system costs to the consumer, rather than just looking at the generation costs. So I totally accept that perspective, but when we talk about the grid transmission costs, we have to consider that the grid enables the generation. The generation also has to coexist with competition. So I'm not saying that competition is fair, but we live in a competitive market, we live in a democracy, we live in a capitalist system. And so if you think about solar, I think solar, and Australia, we've been debating this now for a decade, and the jury's in, the debate's over. There is no such thing as baseload power in Australia anymore. Now, I know that'll be challenging, and I'm happy to debate it, and it will be an ongoing discussion in Asia, in Indonesia, and in India, but there is no such thing as baseload power demand. Baseload power is the concept of a coal-fired power plant or a nuclear power plant that is designed to run at 70, 80, in nuclear's case, 90% of the time. And don't take my word for it. I've had long chats with the CEO, the chairman managing director of National Thermal Power Corporation, now known as NTPC. He was highlighting this point to me 5 years ago, that coal needs to balance renewable energy. It must balance because the grid must be stable. So to Jasnan's point, the consumer expects 24/7 power supply, but the grid operator's challenge in a world of increased competition is to deal with different fuel sources that have different supply characteristics. And so when I was talking to NTPC 5 years ago, what they were observing and modeling was the idea that when it is really sunny in India, and this was predicated on solar reaching 2 rupees. At the time we were having the debate, solar was 4 rupees. Well, today it's now 2. That is below the fuel cost of a coal plant. So for the 8 hours of the day, every day of the year that it's sunny in India, we know solar is going to be the low-cost source of supply. Now, what we also know, every single day of the year, the sun's going to go down. And so therefore, we must supply demand when solar is no longer generating anything, which is predictably every day. So what I would argue is India, and like Australia, like ASEAN, needs to move to a time of day pricing that moves from a cost model to a value model, because we really need to value and value higher the firming, flexible generation that is supplied in India by coal. It could be supplied by hydro, it could be supplied by peaking gas power plants, or it could be supplied by batteries down the track, as it is in Australia and America today. But at the end of the day, we know the coal industry has reported decade-low utilization rates of 52%, and that is in part because renewable energy is the low-cost source of supply. Once built, renewable energy has a zero marginal cost of production. I'll say it again. Once built, renewable energy has a zero marginal cost of production. So the merit order that India and Australia runs with is predicated on taking the lowest marginal cost of production first. Coal is the high cost, marginal cost of production. So in India, I think there's a very, very clear recognition: when it's windy, when it's sunny, renewables are the low cost source of supply. Coal is going to play an absolutely key role in balancing the Indian grid for decades to come. Don't get me wrong, but it won't be a baseload concept. It will be a time of day valuing coal as a peaking power supply, because it can't compete on a cost basis anymore with renewables. Sorry for the long answer.
Okay, interesting. Pak Prasan, thank you, Tim, for the your overview. Mr. Prasan, as a power generations player, how do you view the Tim assessment on the marginal costs of coal in power generation? Tim talking about base load. Yeah.
Yeah, I agree. I agree with Ting. Unfortunately, being a coal generator, but I do agree with him because the whole scenario is changing and it's changing very fast. So whatever he said is true, that in times to come, the solar will become a more bigger player, because this base load concept may go out, and now in India also all generators are thinking of how they can bundle their power and maybe set up some solar generation, and maybe run their power plant lower. But all those things are under discussion, and basically lowering the generation of a power plant is not that easy. So a lot of technology is involved, a lot of discussions are going on. But to an extent, the coal cost is definitely hurting the generators, because the coal cost is very high. It's nearly 3.5 rupees, as discussed earlier. So that is a problem. So I do agree with Tim's assessment. It will take some time, but it is going to happen.
Okay, thank you, Prasan. Abhishek, how's you have your assessment on what Tim has mentioned?
Yeah, I'm from the coal industry, but I never say, or I never maintain that the growth in renewables will be lower than that of coal. Definitely, growth in renewables will be significant. But having said that, as Prashant previously mentioned, that coal is the backbone of India's energy industry. And the sustenance or the dependence on coal, at least from India, is going to stay.
Okay, thank you, Prasan. Pak Josnan, you want to elaborate more on your team has contrasted your view on the coal cost, as opposed to use power generation. So I believe ITMG has done its own internal study on the potential market in India, and of course study the rise of renewable in India. What is your view on this, Pak Josnan?
Yeah, I think the main concept and the big picture agree with Tim already explained and already share on this renewable energy, and also I think the mix, mostly what is there will be mixed value of the energy that the strategy of each country will develop. That is one. And as I do mention earlier, that there's no doubt that the renewable energy later on will catch up the fossil fuel. Yeah, that is why we are under Banpu and ITM. We are also already involved or going invest to the greener energy as well, Pak Hendra. That is also one strategy that our group already taken. Definitely, the coal business still there as our base, Pak Hendra. Thank you.
Okay, thank you. Pak Ramli, you mentioned earlier about your experience more than 2 decades on the coal trading business. Is India's buyer is considered as a very price sensitive. Yeah, the market is very price sensitive, and you've heard about the changing policy, changing trends. So how confident are you that the Indian customer remains price sensitive, and rather than rather than the policy will change the buyer perspective? Or
Okay, but you see, the thing is that this is my personal opinion. As I see it, I think the Indian market will continue to be price sensitive. Why? Because as far as Indonesian coal is concerned, our main two biggest customers is China and India. So right now, the Indian buyers are basically watching what is happening in China. Where is it going? Is price still going to be high, or is it what is happening? We all know that the prices are beginning to soften. Come maybe February and March looks like it's beginning to weaken. Yeah. So and you can see this the stocks, the Indian power plants stocks can be considered as healthy. They are not really in dire straits to make any purchases. I think they have managed their stocks well, and also probably because of the demand. Yeah, as we know, last quarter only that the demand starts to increase, but I look at it as Indian customers are not really in a hurry to make any purchases on an immediate basis. So as I said, what will happen is unless the cost of infrastructure in India can be reduced, or there is an improvement in the infrastructure in India, then you will see what do you call that? Some changes in the importation pattern. Otherwise, I don't think so. You see, even like now, there is talks that there's a privatization of concessions, coal concessions to the private sector. Even then, it's not going to be an overnight thing. I think Tim has answered that question, and it's going to take a while. Land acquisition, let it be in Indonesia, let it be in India. Is the problem is the same. You know, it's always a problem with land acquisition, and it will take a lot of time, and that has to be solved. But my main question is that this will probably goes to Pak Prashan, yeah, in the sense that as a power producer, I understand that you have to sell power on a fixed price basis, which means that even if your cost of fuel feed increases, you are bound to sell at that fixed price. Is that right? And if so, how do you manage if your fuel feed starts to increase? The cost of your fuel feed starts to increase.
Yeah, thank you, Pak.
Yes, you are
Pak
absolutely
Prashan.
correct. We have to, yeah, we have to sell power at a fixed price, and you have to plan your coal purchases accordingly. And if you are on the higher side, then you have to bear the losses because you are committed to sell that power in the grid. So this kind of price increase definitely creates a big problem for us, what has happened in the last 2 months. Basically, otherwise we keep planning our coal purchases for maybe a quarter or 6 months or whatever it may be. But when the prices go up to, like, you know, by $15-20, then it creates a big dent in our balance sheet. So, but what you pointed out, that we are committed to sell power at a fixed price.
Okay.
Okay, thank you. Okay, before I let all its panelists to give the 1 minute closing statement, I'll ask a quick question to Abhishek. In Indonesia, is everybody talking about coal gasification, coal downstreaming? How is in India? Just wondering.
In India also, we have been talking about coal gasification and all for a very long time, but nothing significant has taken place yet. There are a few pilot projects that have come up, but still commercially we are still lagging behind a lot. So yeah, nothing significant no significant development has taken place in India yet.
Okay, okay, thank you. Tim, this is the closing statement. I'll give you time first to give you summarize important points of in the presentation today.
Thanks, Hendra. I might just pick up again on the point of solar's increased cost competitiveness. And again, Jasnautan, I totally agree and understand your question, and I've been debating that with energy experts in India and Australia forever. It's not a fair fight. what we really need to think about is that there is a dramatic increase in competition in coal markets, in the power markets, should I say. Coal is an input to the power markets. And so when we study electricity, you've got to think about nuclear, you've got to think about hydro, and you've now got to think about renewable energy. And also bear in mind, solar can be built in 12 months, whereas it takes 5+ years to build a coal plant. And so at the end of the day, global finance has pivoted dramatically in the last 12 months. Solar is the low-cost source of supply for new product in markets that are open to global capital. And I think batteries are going to play a critical role, as will gas peakers. And so we really need to think about time of day pricing to value the flexibility of thermal power generation to prolong its life so that we get a balanced and reliable grid as we progressively decarbonize. Thank you.
Okay, thank you, Tim Buckley from IEFFA, International Economic Energy Financial Analysis, joining us from Sydney, Australia. And now, Pak Jusnan, your closing statement, Pak Jusnan.
Yep, thank you, Pak Indra. Yep, my closing statement is the renewable energy will growing fast. However, the fossil energy will be still there. And for India, as domestic coal will continue growth in the production. However, the logistic issue is still there, and the requirement of the coal import, especially for the coastal area power plant and cement company, will be there. Thank you.
Thank you, Pak Yusnan Ruslan, Director of PT Indo Tambang Raya Megah TBK. Now, Pak Prasan Goyal, Executive Director of Bradreswar Vidyut Private Limited India. Your closing statement, please, Prasan.
Goyal has a problem with connection.
Oh, okay. Now, Abhishek.
Yeah, so as I mentioned earlier, according to our expectations, imports growth will continue through the 2020s. However, the trajectory will be lower than expectations pre-COVID-19 by about 15 to 20 million metric tons per year. Indonesia, which is the primary supplier to the Indian thermal generation sector, faces the biggest risks in terms of losing the market share. So thank you, everyone.
Okay, thank you, Abhishek Rakshit, the Research Manager, India Coal, Metals and Mining, IRS Market. Pak Ramli Ahmad, yeah?
Yeah, thank you, Pak Indra. As I see it in my closing statement, India will still be our market. The demand will still be there. Renewable energy will come, but nonetheless, coal is there to stay, at least for the next 5 to 7 years, yeah, before something comes along. Unless something comes along really fast in the next 1 to 2 years, but I doubt. Yeah, I doubt. I think it will be there for the next 5 to 7 years, and but the demand, in my opinion, may not be as strong as before. We will see. Probably for us as traders, we will have to look into emerging markets. Alternate markets, our friends in Philippines, in Vietnam, in Bangladesh, Pakistan, all these places that we probably have to look at. Well, of course, India will still be there, but it will be reducing. That's my opinion. Thank you for this opportunity. Thank you. Yeah.
Thank you, Pak Ramli Ahmad, Director of PT Firima Impacts. Mr. Prasan Goyal is still with us, Pak Adianto?
Prasan already left, Pak.
Oh, okay.
Yes,
all right. Okay.
Problem.
So thank you, gentlemen, all the panelists, Prasan, Abhishek, Tim, Pak Jusnan, Pak Ramli Ahmad, for the very fascinating presentation and also discussion, very engaging discussions, and all the participants. Also, I've seen the questions, yeah, very interesting question raised by all participants, and all the response from panelists has been very very excellent. So thank you very much for all your participation today and all the participants who have been following the discussions. What has been very useful, informative for us Indonesians coal producers. And Tim, you study is excellent study, so we're keen to devote more time to study what your assessment on your the growth of the renewable energy in India. Okay, thank you very much, everybody. Pak Adianto, I'll get back to you, Pak Adianto dan Bu Desi, to close these sessions.
Bu Des masih mute suaranya.
Sorry, thank you, Pak Hendra. Ladies and gentlemen, we are now come to the end of this meeting or webinar. We believe all of us have obtained a very fruitful discussion today. We have learned a lot from 5 distinguished gentlemen speakers who have shared their excellent works and experiences. On behalf of Coal Asia and Petromindo, I would like to thank all presenters, moderator, participants who have joined this webinar. Thank you, Mr. Prasan Goyal, Executive Director at Batreswar Vidyut PVT Ltd India. Mr. Abhishek Rakshit from IHS Market. Thank you, Mr. Abhishek. Mr. Tim Buckley from IEEFA, joining from Sydney. Thank you very much. Pak Yusnan Ruslan, thank you very much, Director of PT Indo Tambang Raya Megah. And Pak Ramli Ahmad is the President Director of PT Virema Impex, and Pak Hendra Sinedia, Executive Director of ICMA. Thank you for making your valuable time to be here. And a special appreciation and thank you to our general sponsor, also to PT Geo Services. We look forward to see you all again on our next prestigious webinars. Please visit our website for more details. Okay, thank you everyone. Let's stay safe and healthy, and goodbye.
Goodbye.
Okay, thank you.
Bye. Thank you,
Pak
everyone.
Ramli,
Okay.
Pak Yusnan,
Yeah, thank you,
Tim,
Pak.
Abhishek, Bu Desi, Pak Adianto.
Yes,
Thank you very much.
Pak. Thank you, Pak.
All the
Thank you.
participants.
Thank you, everyone.
Thank you.
Pak Tim, thank you, Pak.